Hello and welcome. In this video, I will cover the Western Digital stock. As you might know, the company generates basically is the product is hard disk and scan disk. These are all belongs to the same company. So the reason why I'm doing this is because of this. The company, the book values is less than 2, and it was as you can see in the book line, in the blue line, right? So if you can see, if I build the line here, it was around 8 years ago when we have around this is in this range. So that's a quite a good buy. And another second reason is also the the company, the revenue which company is generating. For every dollar of the revenue, we are only paying, honestly, not even a dollar, which is 93 cents. So even 7 cents profit from its revenue, right? So, and that was, again, it's in 2008. So seems like the company valuation goes back with the time. And another main reason, as for the dividend lover, is look at the dividend. The company is paying almost 4% of the dividend yield, which makes it's around $2 of annual dividend. Given all these factors, now will see some fundamental analysis, go over the quick trend and see what's the analysts are expecting the price to be, whether this is the current price is fair, is expensive, or it's cheaper. And last but not the least, I will also share at the end of the video who are the super investors who have recently invested and buying this stock, right? So let's get started. And if you're new to my channel, please subscribe and hit that smash like button. And yeah, so what's happening to WDC? The ticker is WDC. As you can see, it's basically dropped from here, right around 65. It dropped and then settled around this price, around 40 something. But recently its stocks picks up. I remember just a month ago it was around 29 or 32 dollars, right? It's around 30 plus $39, right? Now the stock price is around $51. It still has a pretty room to go. I think there's a healthy room to around $8 or $10, $10 at least. That's if see. But if the stocks keep going back, or company does back, so it has a pretty even long way to go. Because if you can see from this technical, the company is doing more like the trend, right? It goes up, goes down, and then goes up, and seems like it now is going up. Now the time is maybe goes up before it's further down. But for sure, nobody knows the future right now. I'm not doing any technical analysis. Let's focus on fundamental, which we know better, or at least I know a little better. Okay. So, okay, let's start from the revenues. If I see from the revenue perspective, which is seen in the blue line, as you can see the total revenue from 2012 to 2020 now, and the orange is the net income. The pretty much the revenue is up, right? Is up, and it's declined with the last 2 quarters. Right, but last two, basically these are the annually, sorry, not the quarter. And with the last in 2019 and 2020. But the main reason why the stock dips is, look at the net profit. The net profit, basically it drops a lot, and now it's dropped a little bit. Maybe the next one they can go up, but that's one of the main reason the stock is down. If I see the overall this trend on the revenue growth, either the revenue is growing up or down over the last 8 years, I can see pretty much match here with the price, right? You can see that's why one of the reason I show you that price, because you see that exactly matches the revenue, right? Seems like now the economic open up and more people buying, so seems like it has the possibility to go up, and especially in the last quarter of 2020, when people want to buy those scan disk, hard drives, and all those things to store those memories and information. So that's might have these, even get the seasonality push to get this the revenue up for the last quarter. If I see from the gross margin perspective, again, this is as a huge drop. I'll on the gross margin side, but now it's keep up. So it's not that bad. If you see, this is 23% on the gross margin, but for sure is not that great. Pretty much, if I see on the 8-year average, it comes around 28. So it's a little bit lower from the historical trend, right? Yeah, this is one of my favorite as well, which shows how much the company is generating in the cash flow from their organic operations, and then how much company is invested. And then based on that, we'll see the free cash flow as well, because we know the operating cash flow minus the capital expenditures give us the free cash flow as well. So this line basically you see here, this is the free cash flow line, right? And this is how this free cash flow is going. And now with the recent from 2018 to now, it's dropped and goes to very, very less. But if you can, it comes around to $177 million, right? But if you can see the operating cash flow, which is in blue, it's quite basically it's follow the same cycle of the revenue, because if the revenue is increasing, seems like the operating cash flow is also increasing. It goes like this cycles, like this is the, and then it declines here, and same is happening. So if the top line, and then it's for, so that shows that the quality of the revenue recognitions and what's come in the cash, it's matches. So that shows the good quality. But at the same time, because these companies, they have to produce those assets, keep doing research and development. That's what I have find in their the financial statements. These heavy investment required for that plant and equipment, so which eats a lot of their cash. So that's one of the main problem of these kind of a business. You can see the cash flow. Look at the cash flow right here, 2.85 billion. Right here is over 3 billion. Here is over 4 billion, right? Oh, sorry, the investment in the PP&E, right? And the cash flow is not bad as well. The cash flow is in the blue line is over 4 billion, and here is over 1.5 billion and here $824 million, right? And for sure, if we just exclude this part, because this is by the COVID 2020 year, right? All the companies are doing bad, but that's the main, because they need to invest in heavy. So that's why the free cash flow is not consistent. Now, if we see from the another, if you want to buy the whole company and see how much time it takes me to get back in the number of years my whole money back, if you can see, it was very good in 2012 or even until 2016, right? So the ratio was around 4 or 5, and it's got better here in 18, and now it's coming back. So it's not that bad as well. It's around 10. So anything below 15 seems good in terms of this ratio. So lower is better. Think that way. It takes these, if you buy the company, it will take X number of years to get your cash the money back. Okay, so another good point I like about this stock is the debt. The company doesn't have the huge amount of debt. So basically, for every for the equity, or the shareholders' equity or its net worth, it has closer to, let's say, 98 cents, or let's assume $1 debt. So it's like a half and half ratio. So if you have $1, your net worth is there, then you have the same amount of, or little bit less debt is there. So that's what it's trying to show. Now, what's the analyst? So analysts are expecting the average price, if the company is doing, that is close to $55, right? So right now the price is around 51 something here. So analyst is expecting, this is the average, right? Even average is 55, right? So this means the share price right now, right? So share price of 51 or some cents is lower than, for sure, even the average. So it might goes up, and or it can go down. I think the chances are less to go down based on the seasonality factors of the December time. The mostly people go and buy those scan disc and all to save those. That one of my opinion, and that as well. The close competitors on this one is, for example, the Microtech. They also have the good investment. For me, I'm pretty long on that one, so that's one of the reason I'm not long. Means I have a position in the Microtech MU Technologies, so not in this one, because that's a good mix on the technology plus the this drive, right? The storage place. Sometimes I don't usually write my scripts, so sometimes it's hard to get the words out. But but if you see, then who else the good investors super investor has invested in these, which is my last or surprising slides, none other than Mr. Michael Burry. And that's what I have also revealed when I did his full portfolio analysis. He's none other than but the author of the value investor, or the margin of safety, right, which all we admire. So he only buys those stocks which he think it has a lot of good margin, so there is a less chance to goes down. And in addition to that, there are some other super investors funds, for example FPA Capital Fund, Robert Alstein, and Clearbridge. These are at least less well-known name, but this name is, if you follow my video, this is a good sign. When I put two flag, pretty heavy flag, Mr. Burry has invested in 6% of his portfolio and 250,000 shares, and he bought this recently. So that's pretty much on it. So what do you think? Do you want to buy this? But before you think, please subscribe if you're new to the channel. Hit that thumbs and like button, and don't forget to put a comment on your favorite stock. I understand some of the people have asked me to do the growth stocks. I'll try to. There are so many, but also at the same time huge valuations. So I don't want to waste times to do that. But if I find something, definitely, or I'll see in future, try to cover that as well as the time permits as well. Okay. Thanks for watching. Have a wonderful day or night, whichever time zone you are, and bye for now.